Alright, what is up boys and girls, welcome back to another video on liquidity, supply and demand. As always, thank you very much for joining me. Please do drop a like and subscribe to the channel for this crazy 80% win rate strategy that I've been using over the past 6 or 7 months now. I've seen 3 or 4 different people talking about this strategy online, and I finally decided to test it out myself, and I've been having a crazy time at trading this strategy. So in this video, I'm going to show you a few examples of some trades that I've taken recently, and also give you an idea of what the strategy actually is and how I trade it specifically. I have modified it somewhat so that it's my own potential strategy now, or at least my version of the strategy that works for me. I find it very simple to trade and also very effective. So I did just want to go over what the trading strategy is. I'll also give you some good examples. If you do want alerts or signals for this strategy, you can get them down in the description below. All you need to do is sign up to my private Discord. So basically just going to show you what the strategy is. So say for example, we've actually got a really good example of it here. So I'd say a reasonably good example, but basically what I'm looking for is these V-shaped recoveries or V-shaped reversals. Some people call them void reversals as well. There's a lot of different ways of saying the same thing, but basically what the way that I trade is I'll be looking for, got your market structure, accumulation most likely. You form yourself a nice level of liquidity to come down and get swept. And then very simply, all you're looking for is this nice V-shape recovery back to the upside. You'd be looking for the sweep down below, followed by the V-shape back up like this in the space of, I would say, 3 or 4 candles like this. This is what you want to see. And then you're looking for that nice inverted fair value gap. You can see there was one here that I just created myself. You're looking for that nice sweep of liquidity, followed by that inverted fair value gap to close back above. And then you've got your nice entry condition for continuation back in this direction. This is essentially the entry model. Very simple stuff. Once you close back above this level here, I'd be looking for stop loss below, targeting a 1-for-1 for the first take profit. Once that goes and gets hit, I'll have 2 more runners, one usually about halfway up the move, and then one at the high of day, or as we are at the minute, at all-time highs, because as we know, we're currently at all-time highs, and right now, all-time highs are very easy to go and get hit again and again and again. And this is basically the entry model strategy. It's been really working well for me, to be honest, and it's been pretty easy as well, very obvious, and a cool way to trade. You can see on this particular example, we've got this nice, we come down, we get the liquidity sweep, we bounce back up, you enter on the inverted fair value gap, you target a 1-for-1. Once you hit a 1-for-1, if you do, you go break even, and then you're basically just targeting runners back up through the liquidity. Very simple stuff. And then if you do close back below the inverted fair value gap, then you basically close the position manually and call it a loss. Quite often what will happen is you'll get this bounce back up, you'll come down, you'll wick down below this inverted fair value gap like this, and then you'll bounce and continue. So having hard stops is I've actually found it lowers my win rate a very large amount, just because I'd get hard stopped out and then the move would go in my direction, which is obviously a bit of a bummer. And this can happen quite a lot to people. Obviously the market is a stop loss hunting machine, as we know, if you're looking at ICT concepts. This way of trading has really changed everything for me, to be honest, in terms of how I view the markets, because I was always wondering, why do my stop losses get hit with such frequency? And it's quite often because, you know, the market is basically looking for that liquidity before it moves again in a certain direction. Sometimes it needs to take liquidity on a certain side before it comes back up in the direction that you want to see. But quite often you might get stopped out because of it. The amount of times where people will probably have their, let's say for example here, someone took a long position here, they've got their stop loss below this low, and then they're basically just holding the position. They come down, they get stopped out, and then the position goes up and hits whatever, their take profit or up to the swing high or whatever. This is how people trade the markets like 50, 60, 70% of the time. And there's so many stop losses and so much liquidity on the markets that's just there that people are after. I actually took a trade this morning. It wasn't a super clean setup, but I just did really like the momentum back to the upside. You can see, obviously, new week opening gap here is a big draw of liquidity. This is a big good target that you can come up and try and hit. And I saw that we were going sideways in this kind of accumulation here. We've got this manipulation down, sweeping out all this liquidity here. And then we've got this nice manipulation leg where we come down, we sweep again. We didn't sweep the true low here, but we did get this nice manipulation down. A little bit of a V shape and consolidation, but we never inverted this fair value gap here, as you can see. And then we came down, we got another sweep, and then we got this really big momentum candle above this fair value gap. I took this trade because I thought that it would probably work at least to the high, which was here. You can see we came up and hit that. I went break even. And then I basically had runners to these levels here. Took half my position off at 1 for 1, which was here. And then I had a runner up to this high. And then my final take profit is up here at the fill of this big gap. Really, really good trade. Overall, I thought that this would work. As I said, at least to the high. And it did pretty well, to be honest. You can see it basically came up. Basically came up to my first 2 take profits. Now the rest of this position is at break even, and I'm basically just waiting and seeing what's going to happen next. I do think we'll come back, have a little retrace here, and then continue and fill this gap, just because you can see we've kind of retraced somewhat from the all-time high. Some pretty big, weird swings in Asia session recently, by the way. I think were these both? No, it was just this one here. I'm pretty sure there was a big swing recently as well, but you can see we've kind of been chopping around at all-time highs quite a lot here. I think we're getting down probably towards the extremity of this particular range that we've been in for a while. You can see we're in a good area for getting long positions to target back up through liquidity to this sell side liquidity up here. You can see looking like we're struggling a little bit with this resistance, but I'd probably expect this to bounce back up and fill this gap, maybe even continue up towards the all-time highs. You can see starting to generate a lot of liquidity on this side up here. If I can actually use my right tool. Got a lot of liquidity being built up, you can see, on this 5 minute for the past 5 or 6 days. And you can imagine if this started to get some momentum here, that we could come up at least to this trend line. This would probably be a really, really good swing trade. I'll probably start trading my stop loss once we head up. I do think this gap's going to get filled. Once that does get filled, I do think we'll continue upwards. But you can see this was a good trade. One that I literally took half an hour ago, not even an hour ago right now. These obviously happen all the time, though. Loads and loads of good trades on the market, literally all the time. What else have we got here? This was a potential one, wasn't it? I think this might have been a 1 minute that I took. Let me have a quick look here. Was this the one that was a break even? Yeah, this probably would have been a break even. This 1 minute here. Yeah, 1 for 1 break even. Obviously a massive move to the downside. This was a very, very nice trade, actually. If you took a short on this, you can see came up, swept liquidity. Obviously at all-time highs. I'm always loath to short at all-time highs, but if you could have got an entry somewhere here, maybe something like this. You obviously come up, sweep liquidity, come back down. Get a really, really good momentum candle to the downside. Obviously your stop loss is above. Comes down instantly, hits your 1 for 1 take profit. This is basically the V-shape, but reverse. It's the upside down V-shape reversal. Obviously, this would have come down. Could have had runners all the way down here. This would have swept out a ridiculous amount of liquidity. Really good momentum to the downside. I just don't ever short, really, especially because we're at all-time highs. But this obviously would have been a good trade as well. These kinds of opportunities happen all the time in the market. So please do make sure to get involved. Go and try this out for yourself, because I really do think that this is a really good strategy. You can see, if you just eyeball this chart, you can see all these V-shapes. So many of these V-shapes give you an entry that works out. And I've been having an absolute blast recently trading some of these, especially these big ones that turn out to be huge runners. Obviously, they're really, really fun to trade. Overall, this is a really good strategy for me. Very, very simple and just super, super reliable. I've been getting at least 1, maybe 2 trades a day with this on NQ and also on gold. So if you do like the video, please do drop a like, subscribe to the channel and all that good stuff. And if you want to get signals and alerts for this, then please do join my Discord down in the description below. Cheers.